Hello everyone, welcome to this month's Edge podcast. Today we're talking about paying back your student loans, and we're going to give you a few tips on how to do that and great starting points. So let's get into it. As far as paying back your student loans, most students take out student loans and graduate from college in debt, and that's the case for a lot of students, if not the majority of students. I think the average is around 95% of students. The total may seem insurmountable, but we have some tips, as I said, that will help you pay them back. The question of when should you start paying your loans back really depends on a few factors. If you're able to, you should start paying it back as soon as possible. With that being said, there actually is a grace period of 6 months after you graduate, which allows you some time to find a job and start paying those loans back. The best thing to do is check with your loan provider on when those grace periods are up and when you should start paying it back. If absolutely necessary, and this is only if it's absolutely necessary, you might be able to negotiate a deferment on your loans. You may also qualify for forbearance. If this is the case, you must provide a document with your circumstances of hardship to utilize this option with your loan provider. As far as forbearance is concerned and deferment, these are two circumstances that should only be used as a last resort, and I want you to keep that in mind. Try to do everything else possible before you switch to those two options. Another question, what should you do if you go to graduate school after college? If you re-enroll in school and you have to take out another student loan, the current student loans that you have will be placed on hold until you graduate from the next college. Keep in mind though that the graduate student loans and the current ones that you have already will be reinstated in that grace period after you graduate from the next college then. A lot of people ask, should you pay more than what's required for the student loan? Well, that also depends on a few different factors as well. Do you have additional debt to go along with the student loan? Maybe you have car debt or credit card debt, which is a big one. Experts say you should not pay more than required if your interest rate is low and you have other debt. You should always focus on paying your highest interest rate for debt off first before you get into the lower ones. So categorize and set out a budget for which interest rates are highest to the lowest and start paying off the highest debts first. Especially utilize that option with the grace period that you have for the student loans, the 6-month period. There might also be tax benefits. Generally, interest from loans is tax deductible even if you don't itemize. Are you investing? If you are contributing to an IRA or a 401k, you should start to follow that course of action rather than paying off your loans faster. This means you should only be paying, if you have a 401k or an IRA, continue with that. Don't be paying more than you have to on the student loans, because this is a little bit more important. The earlier you begin earning on your investments, the more you'll gain in the long run, which will really help you out with investing more at the present time. If your company does not offer a 401k, you can actually ask your credit union if they can offer an IRA and what your options are for entering into that. Tips for trouble-free paying, and this is something that everybody wants to learn more about. Types of payments. Ideally, if you are able to enroll in a standard payment schedule, you should. This gives you 10 years to pay the loan back, but there are other options. Talk to your lender about other payment options like a graduated payment schedule. There might also be discounts available. Many lenders offer discounts for making payments on time, or if you enroll in the auto payments feature, which automatically takes it out of your checks. Ask your lender about these benefits that may save you in the long run. So if you get those discounts now, you may actually end up paying less in the long run because of the interest. You may also be able to consolidate these as well. If you qualify, you may be able to consolidate your loans into one fixed interest rate. So take all of your loans, someone may be able to help you provide all those loans and consolidate them down into one payment so that it lowers the interest rate on those and actually leads to lower overall payments as well. There's also loan forgiveness programs out there, which are something that you might be able to look into as well. There are programs that will forgive the portions and maybe even all of the loan, depending on your debt situation. These often involve employment in certain industries like working for the government or nonprofit and even some public sectors. So if you work in those sectors and you get work after graduating from college, there might be an option, if you look into it, that they will forgive the debt that you already have as far as a student loan is concerned. You can find out more about that at www.ibrinfo.org. So if you have any questions, we'd love to hear from you. You can leave some questions in the blog section of the website. But in the meantime, hopefully you get everything worked out. And if you do have any trouble, don't forget to check with your credit union about more options available to you. We'll see you next month on the Edge Podcast.